Good morning. We can take a look at the major currencies. I personally like to see what they're going to do for the week coming. I like to do these markets on a Monday, sometimes on a Wednesday, but normally you don't need to do them every day because I give you talks on Skype about what I feel is going to happen for that day, but I like to give a bit more longer term view on a Monday. Now, as you can see, we spent most of last week trading down. We had a bit of a correction Friday, but you can't ignore this down here. Okay, this double base. Now, obviously, if you have this sort of pattern, then you would expect the market to rise. Now, people obviously bought ahead of this double base, as you do. And if you look at how many points we made, you should, from this point, be able to flip it up to give it a measured target. Now I can tell you that measured target is coming in around 141.50. Okay, if you look at the midpoint line for today, it's coming in at 141.99. So there are a lot of reasons why sterling should rise. I think obviously if we see a drawdown, we would like to see it come down to around about Friday's low and Thursday's low, which is coming in at 138.23 on Thursday and 138.35. You can always use the 21-day moving average at 138.20 and the 23.6 fib at 137.85 as a stop for your long positions. So you would like, if you're short term, you don't really want to see it below 137.20. Bit more longer term, you don't mind seeing it just down below that 137.85 area. So you'd be looking, I think, around about 137.80 for a stop. Now, if we do get down here, the chances are, the probability is that we're going to go test that low area down at here, okay, which is 136.70. But the premise of charting and looking at patterns is that doubles hold, triples rarely do. So if we do get down towards that 136.70, 60 area, okay, you cover all shorts, but you're reselling a break. I've got this trend line going back for some time, and that is at 135.99. Obviously, that will hold it initially. I can see no reason why, if we break here, we can't come down to 135. However, we've got the double bottom, we've got the move higher, we've got the pullback, we're breaking up. So we need to really stay long. Okay, you're buying on dips, but long for this move to the top side. Obviously, around figuritis at 140, you're going to have a bit of selling pressure. Even though, we got to 140.09, that was stops, we know what they do. So I'd really like to see it above 140.28 before you can add to your long position. Okay, we'll have a look at dollar Swiss. Now, dollar Swiss today has broken below this area here. That's coming in at 91.28. We've seen lows of 91.21. Not a problem. Okay, not a problem. However, you've got that 200-day moving average coming in at 90.90. So what we can do is, we want to be long, which we do. Okay, we're going to do one or two things. We're either going to buy down to here, which is 91.28 and the 32.8 good lord, 32.8 longer term fib level. We've already broken it, but only by a fraction. Okay, now our stochastics are extremely oversold, so I'm expecting a move higher, because look, since here all we've done is a one-way street. That's all we've done. Since we reached highs of 94.72, we've gone down. So it's low risk, I think, to buy in this area of 91.28 down to 91.02. We'll have our stop below at 200-day moving average coming in at 90.90. So our stops want to be below, 90.75 sort of. I might be tempted to buy some more at that 200-day moving average, but at the moment, longs, we want our stop to be quite a tight one. But I can see this market going up. I would be looking at 91.73 initially. That encompasses 91.70, which is the 9-day moving average, and you're looking at the 50% fib at 91.73 and the 55-day moving average coming in at 91.92. So there are relatively good resistance levels up around here. So no need to be greedy. You go back into a long after we've broken up through the 55-day moving average. So now we'll take a look at the euro. What is it with this euro? Seriously, what is it? Friday it went storming higher, but you have got good resistance at 21.30. Obviously that's 121.30, and again at this longer term fib level, okay, and this longer term fib level is coming in at 21.69. That's 121.69, and that's the 50% fib. Also, you've got this over here coming in at 21.83. So buying euros, I am not liking that one very much. Selling euros, sure. So anywhere up to here, okay, 21.30, you know how the market likes round numbers, so 21.30 to 21.49, say 21.50, I would think you would want to be short of the euro. I can see it coming down to the midpoint of Friday's hot range, which is 20.38. So anywhere down here you want to cover. You can resell below the 9-day average, which is coming in at 20.27. Okay, if we go through there, I haven't got much really until 1974. Oh my god, I was a teenager then. 1974. I was an older teenager, but a teenager nonetheless. And that encompasses the 55-day moving average at 119.71. Here I started work. And if we take that out, then we're coming down to the 200-day moving average, which should by that time intersect with the 21-day moving average and that 38.2 fib. They're coming in respectively 119.25, 119.15, 119.09. There's your downside objective. Alright, now already today we've been up to 120.88 and not liked it. Now that's not to say we're not going to keep trying for that top side. I've given you the levels, I've told you where we want to go short, or where I'm going short, and I'll leave that down to you then. Dollar CAD, well I'll be. It's been up and down and up and down. Luckily we caught it. We went long and short on that day, and the rest of the times it's just dithered. There is still a chance that we can go lower. I would be looking at here, which is 123.65. I don't know whether we're going to get there. We have got some really good support down at these lower levels. I've got 124.67. I've got this here, 124.61. Okay, you've got a little bit here, 124.40. But, you know, anywhere between the 60 and the 40 area, because that's got two little lows down there. That's actually at 35. So between this area here, so today's low down to 124.35 is really where we'd want to be going long. If we don't hold and we do break lower, I'm looking for 123.65, and that's where I would look to go long again. if you look on the top side, you know, we're not seeing much, but apart from here on the 21st. But you've got the 55-day coming in at 125.78, you know, and I'm not sure we can go up to here. You've got a trend line here, 125.65. You've got the 9-day, 125.15, and the 21-day, 125.42. So you're going to have a problem up at these higher levels. So what we'll do, we'll stick to, this is the range we're in. Okay, you can see that clearly. So this is the range we're going to play. So when we get up here, we sell. When we get down here, we buy. Until this rectangular pattern, whatever you want to call it, I call it a trading range, a sideways trading range, but there's obviously, you know, new kids on the block that call it some weird and wonderful name that bears no resemblance to what the chart is actually saying. So you've got a defined trading range, stay within that. No point at all breaking out of that range until it breaks out of that range. Right, we'll take a look at Dolly Yen. I don't like Dolly Yen that much. I try to do as little as I possibly can in Dolly Yen. You can see it's going down. You can see it's been held by the 55-day moving average at 107.99 and the 50% fib at 107.96. Our high has been 107.97. So you can see why we have held there below. Now our RSI is an interesting little thing. The RSI really doesn't move a lot. It doesn't. Now the RSI, when it gets down to below 25%, has its option. It goes, do you know what? I'm oversold at this level. Stochastics can go below 10. RSI, unless it's seriously trending, won't. It won't. So, what do we see happening in this market? You can't ignore that the market is looking weaker on the chart, but the technical indicators are telling you to be careful. That's all they do. They're there as an indicator. That's where I think a lot of people sort of miss the plot with these indicators and take them as gospel. You don't. You take the price as gospel. You take what the chart's patterns are saying as gospel. These, by definition, are indicators. Now the indicators are showing the market to be extremely oversold, which you don't need to see. You can see that in the price action. But we have turned bullish just on those stochastics. Now you can see where the market is flatlining just on that 10% area. Even though we've been coming down, we haven't gone lower than 7%. Okay? We haven't. So that is something to bear in mind. If you're looking at these indicators, look at them in the correct way. I think the market looks under pressure from the charts. It looks under pressure from the price action. So where do I see it going? I'm looking at 107.24, which you can see there is the 61.8 fib and a possibility of 106.74. I don't really see it going much below that this week. I could be wrong. I am wrong. I'd say quite a few times. That's not strictly true, but you know, everybody gets it wrong sometimes. But you do want to watch that top side. If we start to break out on the top side, and you'll know, because for markets to keep going down, we need to stay below here. Now, if we start taking out 107.47, so, you know, we start taking out that, or round figureize 107.55, then the market is going to take that as a sign of, hey, we're oversold, we don't really want to be going lower at this point. And if we take out the 55-day moving average at 108, there is a good chance that we could go and break above that 108.14 or 108.23, we start taking this out, you're going to see, and the 7-day, the 9-day moving average at 108.28, then I think you will see a good correction to the top side, with 108.68 looking to be its first target, and then I'd be looking at it, if it broke above here, I would say 108.83, you'd be looking at 109.23 as an imminent target area, with potential to go to 109.57 this week. Okay, what other ones do I want to have a look at? Nothing on the majors. I'll be doing the Aussie stuff in a bit, and I will be doing Euro against the Euro-dollar cross rates. Okay, good luck. I'll catch you on the desk in a bit.